Hey, what's going on, everybody? Welcome to another Sunday Live over here on the Clark Real Estate Channel. We appreciate you guys checking us out. As usual, like what I like to do is to make sure we are live and we're not talking to ourselves on this live. So I'm going to check my live real quick. All right, there we go. So we are live. Um, so as we always like to do over here, we like to, of course, if you are tuning in for the first time, let us know where you're coming from, where you're tuning in live from. Also, let us know if you have any questions in the comments or any, suggestions or anything that you want to kind of state while we're talking live tonight with this, with our wonderful guest. And if you are watching this back on a replay, please put comments inside below as well. And if you are interested in reaching out to our guest tonight, her email will be inside the not only the live, but I'll also put it inside the comments below as well. So nonetheless, hey, what's going on? What's going on? Nonetheless, let us have our guest introduce herself, and we'll get into this discussion.
All right. Well, hello, everyone. And Devon, thank you so much for having me today. I'm Jamil, a financial well-being coach with Operation Hope. And Operation Hope is a nonprofit organization that has a mission to teach people about financial literacy. We have partnerships with several financial institutions where we help their customers when it comes to establishing their credit, reestablishing their credit, creating a budget, and just basically providing tools and resources when it comes to financial needs. So it's a nonprofit organization. The services we provide are absolutely free. So that's what I do.
And so this is the reason why I want Jamil to come on here tonight is one, because in this particular economy that we're currently in right now, in this economical type of this, I mean, I guess let's say as far as this economy right now, I don't want to get too crazy. As far as this, we are in an economy where we as people need to learn how to sufficiently budget. And we know budgeting looks different for everybody. Financial tips look different for everybody. However, Jamil, like she said, she with Operation Hope. So if you are not currently budgeting or having anything going on as far as financial wise, hopefully at the end of this live, you will reach out to her if she can service you, depending on where you're at. But I do know Operation Hope, I believe, is kind of what globally or nationally per se. So if she can't service you here in Georgia, you definitely can reach out to somebody that is around your area in the state that you're in. But so nonetheless, let's get started with some questions. And remember, you guys, this is a live chat for everybody to come in and ask questions. If you feel like you're trying to either buy a house, or if you're a homeowner currently, or if you are just trying to get your finances together, credit score, different things, Jamil is here because she has, tips for you guys if you guys don't have any of your own. So let's start off with a couple questions that I have. So what are the key steps involved in creating a personal budget, Jamil?
All right. So I would say the key steps are number one, knowing your monthly expenses. Well, actually, number one is knowing your monthly income, because you would be surprised how many people truly don't know how much they're getting paid. And when I'm assisting my clients, I help them to understand what their monthly net income is, and that's the money that actually hits your bank account, not what you always see on your check. It's the amount that actually goes into your bank account. So understanding what that number is. Then you want to understand how much your monthly expenses are. And I truly believe in order to understand that, you need to be organized. So there's some type of tool you need to use where you have those things lined up. It's like you should always know, like, okay, on a monthly basis, with all my bills included, this is how much I spend on a monthly basis. And like I said, knowing how much your income is as well. And then the last component is, well, before I get to the last, is tracking your expenses. So you need to have some type of tool, whether it's a app, your banking. Sometimes our mobile apps or our banking apps do provide budgets and tracking tools so that we can understand how much we're spending in each category. And then the last thing I would say is like a routine in place, like knowing, for example, I have a bill pay account, then I have like a fund money spending account, and then of course I have a savings account. So those are the four, like the four key steps or components when I would talk to someone about creating a budget.
And so, like you said, I don't know about anyone that's currently watching this live or if they're watching this on a replay. But one thing I do know personally with me as a person, even though I get my paychecks right and I see my gross, I'm always like, dang, this is how much they took out net wise, net wise, you know. So typical, like you said, most people might look at the gross when it comes to, I say, purchasing a house or something, right? Not the people
Mhm.
themselves, like the lenders or the mortgagors or
Yeah,
whatever. They
that's
might look
that's
like,
very true.
and so I do think it's smart that people actually do when they're trying to purchase a house that they try to go and look at that net income. So then that way, even if that, some of the mortgagers will say, okay, this is this certain percentage of what you make goes towards your mortgage, blah blah blah. But they're going off the gross, they're not going off the net. So I agree with you as far as like letting people really looking at that net income, because I know
Mhm.
myself, I'm not looking at my net. Well, I am looking at my net, but I know typically people look at that gross income.
Yeah,
So
yeah. Gross income is, like you said, is a key factor when qualifying for a loan. But
mm,
when it comes to managing your monthly expenses and creating your own personal budget, it's like gross is not, it's a non-factor. It's really
yeah.
about what you're truly working with.
hmm And then I know like what you said too, as far as putting different kind of creating different buckets for what you want to do as far as with your
Mhm.
income too. I like that strategy as well. And also being able to track stuff. I know me as well when it comes to this. I know where all my money go to where it goes towards. However, I don't track it correctly. Of course, now because I've started work with you, I'm using the Dave Ramsey everyday
Mhm.
dollar app per se. However, before then, I always knew that one, a lot of my expenses was going to eating out, and outside
Mm.
that was going to gas, because as a realtor, I'm driving around a lot, and of course, outside of that, the typical things like paying the bills. But
Yeah.
other than that, I'm not a person that kind of frivolously spends, and I kind of cut down on everything. So, but I like what you said as far as creating like different buckets and tracking everything.
Yep, absolutely. Absolutely. Because yeah, that I would say the groceries and restaurant spending is what, those are like the main areas where people lose track. And that, especially just going to restaurants, before you know it, the money is gone. Things have gotten so expensive. So
Yeah, that inflation is eating us up.
yeah.
So, if anybody's joining us now, Jamil is here tonight. She is from Operation Hope, and she is here talking about budgeting and financial tips. So if you guys have any questions and regarding finances, please put it inside the comments. Don't be scared to jump in this conversation. That's why we go live. And if you're watching replay, don't forget to put any questions below, or also reach out to her. Her email will be below as well. Okay, so the next one, like you had already said, like how can tracking your expenses help you stay on top of your financial goals? So I know we kind of talked about it a little bit, but I guess how do you feel that tracking can help people kind of stay on top of their financial goals?
Well, when you track your expenses, you basically, I mean, with the more you know, the better you'll do, right? Just in general, with anything in life. So it's like when you know, for example, on a monthly basis, I have a personal checking account that I use just for kind of like miscellaneous things, fun things, right? So basically, I have a certain amount of money that goes into that account. Let's just say I have $400 that goes into that account on a monthly basis.
Okay.
Then I know, you know, I look at things like from a monthly point of view, the beginning of the month and then the end of the month. But long story short, um, that lets me know, hey, you are going to, if you don't watch it, you're going to be over your budget, especially when I'm looking at it at the beginning of the month. Then I pretty much know, hey, you have $200 that you can spend during this certain time frame. And if you're just swiping, then it lets me know you may want to calm down. You may want to sit down. You may want to say no sometimes. So having things set up like that where you can't even overspend in a certain account does help. Tracking your expenses help you stay organized. And me personally, I'm one of those people that I will tell you, being organized and having some type of routine in place is just a key in life in general, but especially when it comes to budgeting, because there's just so many things, life has so many things that we have to focus on and that we have to keep track of. So, tracking your expenses and just knowing where you stand and having a routine in place, whether it's a daily, weekly, or monthly routine in place, will definitely help to accomplish your goals.
And so I know I gave you a bunch of questions, but I'm gonna go off track a little bit too. But so how do you feel about, so this is what I have in place too, right? I have an account with Ally Bank, which is an online banking account. And the purpose of me in that, I don't know if you ever heard of a young lady, her name was it's called the Budgetista. And I kind of I kind of in spaces here and there with financial stuff because I need to get my finances together. But so I listened to her as far as getting like a high interest like yield savings account or like an online type of banking account where you can't directly access the money, right? You have to kind of wait a day or two or whatever you're trying to get something out. So it kind of forces you, if you're out and about and you really want something but you don't really need it, it's like, oh, okay, in order to I have to access this, and so I don't have to, and that kind of stops you. So how do you feel about like people kind of getting those either like those online banking accounts or how do you feel about even like the high interest yield type of accounts as well?
Oh yeah, I absolutely love it. So one thing about me, even though I work in the finance field, I'm still human. Like I still human. I make mistakes. I want things. Sometimes I want things that I don't necessarily have the money for at that particular time. So I will say this. One of my biggest pieces of advice to my clients sometimes is setting up a savings account that is not easily accessible. So if you have your primary bank, you shouldn't have your savings account at that bank, because if you can just transfer the money right over, you're going to transfer the money right over. And let me tell you, I know I'm transferring the money right over because I'm one of those people, when I want something, I want something. So two things that I always suggest to people. Number one is, like I said, having a savings account at a completely different financial institution so that the money is not easily accessible. I personally have my accounts at Edward Jones. So the way I have mine set up is, number one, I have a certain amount that goes from my checking account to the Edward Jones account on a monthly basis. So having like a direct deposit set up is very helpful, because if I manually have to transfer the money over to my savings monthly, it's not happening. I'm not putting any money in savings. As much as I love finances, I'm not putting the money in my savings. So having a direct deposit or some type of automatic transaction that happens to do that is a key component. The second thing I have is, if I want to access that money, then I have to contact my financial advisor in order to access that money. Now, granted, the money is liquid. So, she'll normally respond back in a few minutes or a few hours, and it may take 24 to 48 hours to move the funds over. But at the same time, it's like, I don't want to talk to her. Like, as much as I love her, I don't want to reach out to her. I don't want to talk to her. I don't want her. I don't know. I don't want her asking me questions like, okay, well, why do you need to move the money from your checking or from your savings to your checking? So that has truly helped me. I can tell you, this is something that I've had in place since 2022. And this is the most money I've ever saved in my life, because number one, it's an automatic transaction. Number two, I'm not able to easily get access to the funds. And I have seen where that truly helps me out. So I love it.
Because outside of even like the online banking too, right? I know some people will say even having, like you said, an additional account outside of like the checking and savings per se. But what about, how do you feel about people even going to credit unions? Because a lot of people, they might have another checking account with credit unions. Do you feel like credit unions can also give you, can help
Oh,
you save or give some type of boost or something?
yeah, yeah. Well, I worked at Georgia's own credit union for 4 years. That's one of my favorite credit unions. I absolutely love Georgia's own, and I'm
Right.
definitely a huge advocate of credit unions. Not only because, yeah, if you have like your primary account at like a Bank of America and a Wells Fargo, a credit union is harder to access.
Okay.
And sometimes it can be annoying, sometimes it can be annoying, but the credit union is harder to access. Credit unions have lower interest rates. So I would say they're, for the most part, every auto loan that I've only had one auto loan that was not with the credit union. But every auto loan that I've had has had a really, really great rate. Just in my 4 years of working there, I always felt like, wow, the credit union really, it's a membership. So just
Mhm.
as being an employee there, we're taught to, even in training, it's like we value our members. And I just see where, yeah, when it comes to loans and so forth, we definitely offer better rates. And when it comes to savings, you really have to shop around when it comes to certain rates and so forth, when it comes to getting those high yield savings accounts. But I think in general, putting it over at the credit union does help out a little bit more. And like I said, being a member at a credit union is such an advantage.
Right. James said, "Do you think credit unions are better than banks as far as like a national bank? Do you feel like credit unions better than a national bank?"
When it comes to lending, absolutely, because you're going to, for the most part, get a lower rate at a credit union. And I'm saying that because, like I said, I worked at Georgia's own credit union for 4 years. And just
Mhm.
even now, I use Chat GPT a lot to just get the information I need, like really quick. But if you go
Mhm.
to Chat GPT and say, hey, what institutions have the lowest rates when it comes to loan products or lending, absolutely, um, it's better than the bank. However, um, there are more branches, financial institutions, and banks like Wells Fargo, Bank of America, and Truist have coaches like me on site to help you with your finances. So there's definitely some advantages to the bank, but on the lending point of view, I definitely think they provide better rates.
Right, right. Yeah, because I was about to say, I know sometimes they'll even say when it comes to the lending side, as far as a mortgage on, like you said, like trying to get a home loan or something like that, they'll tell you like to, when you're shopping around for mortgagors, right? They always say, of course, if you want to, you can go to a national bank to shop, even though they're more strict, or you can go to a credit union where you could possibly see better rates, or you can also like shop online, like online lender, or things like that. But I always tell people, if possible, you should kind of check out three different options, right, when it comes to lending, and see which one's the best for you, as far
Yep,
as like, because I know
I
some credit.
I
Oh,
agree.
go ahead.
Oh, I was
Yeah.
just saying, no, I agree. It's having options.
Because I know some credit unions too, they have some, and I know national banks have programs too, but I know some credit unions have programs particular to if you're utilizing the home loans, and just like the national banks too. But if you're utilizing their services out of their bank or whatever, you can get a down payment program or different programs with them, and you can utilize whatever funds they might have on hand that can help you with home ownership and things like that,
Oh
down
yeah,
payment.
yeah. You know what? That's so. When it comes to, I'm glad you said that because when it comes to down payment, and don't get me wrong, because I have not researched that on a credit union point of view, but the credit union typically when it does mortgage lending, The credit unions are more conservative. So for the most part, they're only offering conventional loans. They're super conservative. You definitely will need to have a good credit. You definitely will need to have we call it reserves or savings in order to get a loan with the credit union. But the advantage is you will get a lower interest rate. However, banks do offer down payment assistance, and certain mortgage companies do offer down payment assistance. So that's something, you have to consider. Everybody's situation is different, but that's one of the advantages of shopping with the bank as opposed to a credit union when you're looking for some type of assistance.
And so these, if you guys are just joining us now, we have Jamil here from Operation Hope. And we're just talking about finances, financial tips, budgeting, different things like that. If you have any questions, please put them in the comments. Please join in the conversation. And we'll probably move around the mulberry bush, even though I did give Jamil some questions to look at. But I'm like, while she's here and she's so knowledgeable, we might as well just, ask questions because she's very experienced.
Yeah.
Yeah, no problem. So I know when I talk to you too, and this is also not on the questions that I sent you over. It just stuff comes to my head now because you're just so knowledgeable. So I know when I talked to you and we had, even when you came to our office and we were talking about like credit score and things like that. I guess, and I had mentioned, about the student loans and everything. So and I was talking about it was somebody that came to me and they had a student loan. It wasn't actually a recent client that just asked me this too the other day. They have a student loan and they're like, well, should I pay off my student loan now? Is this going to help me, towards buying a house? And I know that you had mentioned it just depends on what everything's looking like wise as far as everything. So I don't know if you want to kind of talk about that again, because go ahead. Sorry.
Yeah. Okay, I'll elaborate on that because yes, sometimes when it comes to lending questions, it's not really just black and white. It's something we have to elaborate on. So when the question is, hey, if to qualify for a house, should I pay off my student loan? Well, the answer is it truly depends. Not everybody has to pay off their student loans to qualify for a home. Overall, to answer it in like the most simple way I can say, when you're looking to purchase a home, the less amount of debt you have or the least amount of debt you have is always better. Like before you even purchase a home, I would say try to minimize all your debt, credit card debt, loan debt. The more you can minimize your debt, the better your chances are of qualifying. Okay. To elaborate on that, though, there are programs out here that, when they're looking at student loans, they may only consider a percentage of your student loan and your monthly payment to really help you to qualify. There's a lot of products out here that there have been changes because so many people have student loans, and there are certain, I guess, stipulations, or like I said, a percentage of your loan amount will be included in your monthly payment. And then there's things you can do like defer your monthly payment or get on an income-driven monthly payment plan to help out in that case. Okay. The long answer would be, I always tell people when you are looking to qualify for a mortgage loan, there are basically 4 major components. Number 1, your credit score. Your credit score, you want it to be, I always tell people at least 660. There are some lenders out there that promote 580, but you just have to remember that the lower your credit score is, the higher the interest rate. It's going to make it harder to qualify. So I always tell people, like, try to get to like that 660 mark. You could possibly qualify with a 580, but it's very, very rare. People promote it. They love to put that out on the media, but it's harder to qualify when you have a lower score. The second component is verifying your income, because you can say, hey, I've made this amount or I work here, but nothing really matters when it comes to income unless you're able to verify it. And another thing I want to throw out there is if you do have a second job or a side hustle, which is getting so popular these days, In order for the lender to use that income, you have to be on that second job, or that you would have had to have that business. Or, well, I would say when it comes to a second job, you would have had to be on that job for at least 2 years or more before they included in your income to qualify for a loan. Okay. The third component is your debt to income ratio. So that's what we're saying, just, going in, making sure that you're minimizing as much debt as possible. Having a lot of credit card and loan debt is really not helpful. And also, just to throw it out there, like if you're ever trying to decide, hey, should I get that car or should I get the house first? Always get the house first, because it's going to be easier to qualify with no auto loan as opposed to trying to qualify with the $500 or $600 auto loan payment, because that brings your debt to income ratio higher when you have a higher loan payment or high credit card balances. And then the last factor is, we call it reserves, but you want to have your savings. And for the cool thing about your savings is that you can actually have funds in your savings account, but the funds in your retirement account count as well when it comes to a mortgage loan. So just want to break down those components. So I always say, hey, try to minimize your debt. But there are ways and things your lender can do so that even if you have debt, they're still helping you qualify.
And I like that. The whole purpose of over here, and we kind of mentioned it before we jumped on, is try to keep it real, honest, and truthful. Right? Everybody that I have come on this channel that talk, we like to really tell the truth, because we are in an economical situation right now. We do have a new leadership, and things are kind of all over the place. We have seen inflation due to the pandemic. After that whole situation with those low Fed rates and allowing money to be easier to borrow, a lot of people things started kind of going up in price over time. So because of that, we do need we need to be honest with the people. We need to be honest with ourselves, because I feel like some of us still live in a la land. So let's have conversations about it and everything. So when it comes to, again, I know this is not on our questions. When it comes to, I know, right? And if you guys, again, if you're joining us, you have questions for Jamil, please put in the comments anything in regards to finance and budgeting or things like that. Hey, David Manny, he is also a realtor. He's out of Omaha, Nebraska. This is one of my realtor friends and colleagues out of Omaha, Nebraska. So David, if you have any clients in Nebraska that's been asking questions about budgeting and financing, put them in the chat. We can ask Jamil, and maybe you could probably give them some words of advice. But thank you for joining us, David.
Hello.
And so when it comes to, let's talk about credit, because this is the thing that I always see a lot when it comes to and I know this probably has nothing to do with budgeting, but it has everything to do with financing. Let's talk about budgeting, credit scores. So a lot of people that I'm, running into nowadays, they are having challenges credit score wise, right? They're saying, hey, things happened to me, or the pandemic occurred. I got laid off my job. I couldn't afford to pay my bills. And now I'm behind. And because of that, my payment history has messed me up. My credit score has this, or maybe somebody might be in pre-foreclosure because they missed their mortgage. So things like that. So what are some, some tips that you might be able to kind of give people? I know you're not a credit specialist per se, but what are some tips that you could give people when it comes to maybe trying to rebound your credit score per se?
Got it. So, yep, I'm not a credit repair specialist. However, I would say when it comes to tips, so payment history is number one. Payment history is 35% of our credit score. So sometimes people will be like, well, I only paid that credit card late one time, or that credit card was only 30 days late one time. Well, if it's 35% of your credit score, it's going to decrease your credit score tremendously, because that's a huge factor of your score. So I always tell people, this kind of piggies back on what I was saying earlier, being organized. Because when you are organized, when your bills are due, and then you'll know to pay them, and to pay them on time to avoid a late fee. So, being organized. And I know for me, Because at one point, just being completely transparent, uh, credit cards was an issue. Okay. I love credit cards. I'm the credit card queen. So what happens is when you have a lot of credit cards, sometimes it becomes a lot to try to make sure you're paying each one on time. So I would suggest, if you are the credit card queen like me, then set up auto pay so that those cards get paid, because a late fee on top of interest, it gets terrible. Okay, so that's the first component. Another component, a huge component is your debt utilization. That's 30% of your score. So let's say you have credit cards, because because like me, being the credit card queen, you have a lot of credit cards. Well, once you're over 30% utilization on those cards, which is basically you take your credit limit and multiply it by 30% to understand that number, to know that number. But once you're over 30% on that credit card, it starts to bring down your score, even if you're not late. So you want to get to a point where you have to cut down that debt, because you can be organized and track every payment and have your payments on auto pay, but your debt utilization is 30% of your score. So once your credit cards become maxed out, it's going to be hard. So those are like the two major things. And then, there's other things like, make sure that you're having like like when it comes to applying for things, okay? Applying, let's say you needed some new appliances and you need to apply for a loan. Well, you want to apply to maybe 2 or 3 different lenders, like within a 2-week time frame. You don't want to start applying for things like every 30 days, or you don't want to, your inquiries is another key component to your credit score. So when you're out here just applying, and we see all these inquiries, first of all, that can be a red flag to a lender, but things like that will bring down your score. So having some type of strategy in place. And let's see, there's a lot of things when it comes to just helping your credit score, but I would just say, hey, watch who you're pulling your credit with, make sure you pay your bills on time. And when you get that credit card, just try not to go over that 30% utilization, try not to max them out, and stay organized.
Because like you said, I know this was something that most people didn't know, and I don't know if it's changed now, but I know even if you're applying, like to say like you're renting an apartment, right? You have, at the time, I don't know, it might have changed. I got to update myself. I know they gave you like a 14 day or like a 2-week window to keep applying for like apartments without your credit score being hit. So it's like, I know most people didn't even realize that they have that 2-week window. And like I said, it might have changed to a week, I don't know. But at the time it was 2 weeks. You had that window. And I would tell like clients I was working with that were trying to rent at the time, I would say, hey, that it's better for you to put like applications in within this time period, because it's not hitting your credit score over and over again. But I was like, once that time period lapsed and then you try to apply again, because I had one lady come to me, she applied for an apartment in like the beginning of January, and then she was like, she got denied, so she didn't go back and she didn't apply again to the next month, beginning of February. And I told her, I was like, oh, your credit score got hit twice now. You should have did it with all that window. So I know that's what you were kind of mentioning.
Yeah. Like yep. And that's what I'm saying, having that strategy in place where when you're applying for a new car or credit card, yes, using that 2-week window, because like you said earlier, you want to have options. So normally when I'm looking for something, I'm shopping with maybe 3 is the max. I'm shopping between 2 to 3 lenders to see who gives me the best deal, but definitely don't allow them to pull your credit score or pull your credit like every 30 days, because that's actually just me being a lender. That's actually a red flag when we look at someone's inquiries and we see that they're applying like to so many places like every single month. So definitely utilizing that 2-week window. And there's so many things just in general. Credit is such a particular thing. It's the way things work. So there's so many tips and so forth, but just another one out there, like pay down or pay off your credit card, pay down your credit card, but don't close the account. Things like that as well could be helpful when it comes to increasing your score, and monitor your credit. Know what's going on with your credit. Sometimes people like, you know what, I don't even want to know what's going on, or I don't even want to look at my credit score right now. But I always tell people, to me, Credit Karma and Experian are the best ways to monitor your credit, because you just want to, let's say that someone stole your identity and they're out shopping and applying for things. Well, when you can get alerts for every time your credit is pulled, so that you can know what's going on, so that you can um, avoid those issues of people putting other accounts in your name, or things of that nature. So just monitoring your account is so good. And it can get kind of tricky with Credit Karma. A lot of times people say, well, why is my credit score so low on Credit Karma? My credit score is not the same as when I applied for this other place. Well, there are 3 credit bureaus, but within those 3 credit bureaus, there are like almost 100 different scoring models. There's different scoring models. So we truly have so many different credit scores, but don't really get too caught up on the score, because your score is going to be different according to what scoring model the lender uses when they pull your score, or what credit bureau you're looking at. I would just say use those tools to monitor your credit, so that you know what's going on when your credit score increases or decreases, or when you have an inquiry. That way you can keep track of things.
So David asked the question, he said, Jamil, what is the one piece of advice you would give a person just starting out right out of high school or graduating from college?
Ooh, that's a really good question. So I would tell them to, if their parents have established credit, I would tell them to ask their parents to be, if they can add them on as an authorized user. And this is probably really advice to the parents, because when you have a child, you're really starting them off. So, parents out there, if you have a kid, definitely adding them as an authorized user to your credit card is helpful when it comes to establishing credit. I would also encourage them to budget. Yep, absolutely budget. Have a strategy in place. My financial advisor does talk about the 50-30-20 rule.
Okay.
Have you guys heard of that? When you have, your 50% of your income going towards your needs, 30% of your income going towards your wants, and 20% going towards your savings. So that is a good routine as well for a young person. And yeah, I always stick to being organized, having some type of tool in place to budget and to track your expenses. I use the Dave Ramsey Save Every Dollar app. That's really good. And I also have a journal that I use to organize my expenses as well. So those are some pieces of advice I would give to, some of our younger people when it comes to understanding their finances. Oh, and one more, educate yourself. So workshops, workshops are really good. Operation Hope is a nonprofit organization that offers free workshops virtually. We have partnerships or strategic alliances. So I also do workshops at churches. I speak to people in real estate. But educating yourself, the more you know, the more power you have. So just go out there, getting all the education that you can possibly get.
Yeah, and that's why David said solid advice, and that's the
Thank you.
reason why I had Jamil on here, because I met Jamil through a colleague of mine named Key, and Jamil came, I think, from a client that Key had, as far as getting connected, and I like the whole thing of what Operation Hope does as far as offering, like, those free service, like you said, the workshop, in-person workshops, financial, the coaching one-on-ones, if possible, in the state that you're in or city that you're in. But being able to utilizing all these tools and getting accessibility to something so you can stay knowledgeable and up to date, and you can make the best decisions or for yourself when it comes to your finances and in any way that you want to kind of utilize the whole strategy. I currently have just recently started doing coaching with Jamil. We actually have a session tomorrow.
Yeah.
And I came to Jamil in the sense of not really needing to do credit score, but more in the sense of I have 2 credit cards, which I always tell everybody on live that I'm trying to pay my debt down, like my credit card debt. I have 2 credit cards that I want to pay down, and I currently, I used to have health care, but I don't. So Jamil did put that in place for me to kind of get some health care on my monthly routine as far as paying into healthcare. But yeah, so using Operation Hope is not always just strictly about just trying to budgeting, but also trying to create like a whole type of plan for yourself. That's how I'm kind of seeing it, right? Like outside of just budgeting and finance, like a whole plan for myself.
Yeah, because the mission is to teach financial literacy just in general. So, as a previous lender, I have like a passion for helping people to purchase homes. And I have that's kind of like been my niche here for the, past it's 2.5 years that I've worked here. It's like I'm always partnering. That's how I met you. I met you through Key, which is a realtor. So, um, that has been very, very helpful. But I was going to say, it was something. Oh, but the more I teach people, it's so funny because the more I work here, I understand why financial advising is so important when it comes to purchasing a home, but when it comes to retirement as well. Lately, I've been teaching my young people we are not going to work. We're not going to want to work forever. We need to have something in place. We have to get something in place when we are in our 20s, so that way there's money put aside because the years go by so fast. I'm 38 years old, and I remember starting at Bank of America at just like, I think I was 19. I was 20 years old when I started at Bank of America. But it's just so important. The years fly by, long story short. So you want to have a retirement, funds set aside. You want to have a strategy or routine to put funds aside. Yeah, I do feel like it's very important to have healthcare. I always really preach to my young people, health is wealth. So do what you can to make sure you're taking care of yourself. But just in general, it's a great place because overall, we're looking at your financial future just in general.
And David said we need more financial education in school. Yes, we do.
Yes, we do. But you know what? They're changing that. My daughter, she's in middle school, and she just had a project the other day that really broke down her credit score, her little fake school credit score, getting a loan. It taught her about high interest loans and so I think we definitely need more education, but I think the schools are getting on board. So hopefully we see more of that. But I love the fact that when she said, "Oh, Mom, I have a great project you can help me with." And I'm like, wow, I'm so glad that they're finally teaching kids that, you don't want to have a high interest rate for an auto loan. And she can see how having that high rate made her payments high and how the loan depreciated over time. So, yep, absolutely. I'm hoping we get more and more of that.
He said, I would also suggest to start saving for retirement early. Amen. So similar to what you said. And that's something that I haven't, I don't feel like I've personally done. Like I've started, like I had some, like, some stock stuff here and different things that I've been doing here and there. But I have my little Allied savings account stuff and, different stuff here. But I don't feel like you said, most of us, when we're in our, our early 20s or even our late teens, we're not being taught, depending on where you come from, right? Where I came from, I wasn't being taught per se to really save, even though I know a lot of people say, Black people say save your money. However, as Black people, I feel like we spend a lot more than we save. Well, that's how I look at it, right? I don't know if it's true or not, but I know that so I feel like I don't want to say we're into the lifestyle with the flossing and everything, but that's how I kind of see it a lot as far as us really saving. So I think that is good what you guys are doing, what you're doing as far as like educating and telling people that we should be saving for retirement, even at an early
Yeah.
age.
Yes. Yep, the time is going to fly by, and that's one reason I am so blessed to have started working in the finance industry at such a young age, because as soon as I started working at Bank of America, one of my coworkers said, "Hey, you need to start saving for retirement." So at 19, 20 years old, I established my first retirement account, and that's just something that I was taught at such a young age. But just as I'm out here teaching people, is sometimes people don't start saving for retirement until they're like 40, sometimes even older than that. And it's a disservice, because you have employers that will match what you put aside for in your 401k. And it can be really, really helpful. And like I said earlier today, when you are looking to purchase a home, the lenders can use your retirement money as down payment money as well. So, sometimes that can be super helpful if you just didn't have a regular savings account. You're going to need your retirement funds. So I'm not suggesting that you use your retirement funds for the down payment on your home, but I do want to put it out there that you can, so people will know that that retirement savings can go towards one of the factors to help you qualify for a loan.
And I know you guys saying, I thought we were talking about budgeting and financial tips. However, I figure we just go into a normal conversations because, again, budgeting and finances can be different for everybody else. For everybody, I should say. So I figure we just have, just a normal conversation and just ebb and flow while we're doing this this particular live. So James said credit card companies seem to target college kids, and many are in debt before graduation. So
oh yeah, that's very true. Not and credit card companies, financial institutions, they're targeting a lot of college kids, and it's just unfortunate because they don't know. So I think all of us, as soon as we graduated from high school, that's the first thing we wanted to do is qualify for a Macy's credit card. And the thing about it is, a lot of times we're teaching our kids don't apply for credit cards. No, credit cards are going to help you to establish your credit. So you do need one or two credit cards. Don't max out the credit cards. Don't forget to pay the bill on your credit cards. You have to be so careful what we're teaching our youth and the students, because credit card debt is actually what establishes your credit score. So you don't necessarily want them to stay away from credit cards, but you just want them to know that too many credit cards and too much debt is going to be extremely difficult to get out of. And so, I think as parents and just people in the finance world, we just have to continue to spread the word and continue to put it out there so that more people are aware of, how to stay out of credit card debt. Because like I said, even me, I'm the credit card queen, but it's like you have to let it work for you. And the more you know, the better you will do. But ultimately, I would encourage people to, not go into debt. Only have one or two credit cards, and try to stay away from multiple credit cards. Try to stay away from using your credit cards to purchase things you cannot afford.
So how do you feel about, I know you said, of course, it's always great to get a few credit cards, right? One or two per se. So do you encourage people? Because I know at one time people would say, don't open up a credit card at, like you said, like a Macy's or like a retail store or those things, but they'll say it's okay to open up, a Capital One credit card or those type of credit cards. Do you feel like people should open up those retail credit cards, or do you feel like they should kind of stay more on like those, I guess, Capital One, MasterCard, those type of looking credit cards?
So it depends. If like what I would teach my daughter when she gets a credit card, I'm going to put her as an authorized user on my credit card to help, kind of keep track and monitor things. So I'll, know what's going on. But when it comes to getting a credit card, I do feel like a credit unions have credit cards at lower interest rates as opposed to like Capital One. However, Capital One is an easier credit card to qualify for. Normally, you don't need much established credit to get a credit card with Capital One. So I would say this: if you are looking to establish credit, maybe Capital One would get you in the door, but it's just credit cards with credit unions do have a lower interest rate. And then sometimes also taking advantage of credit cards that offer a 0% interest for a promotional period of time. Those can be good as well, because then maybe if you need to purchase something, you are able to have 0% interest for 12 to 15 months. That can be helpful. But after that 12 to 15 months, please know that credit card interest rate is going to be like 33%. So you want to have, whatever you're using that credit card for, you want to be able to pay it off within that promotional, within that period where you get the promotional offer. So it's things like that, just teaching our youth, like, you can play the game once you know the game. And I think if we continue to show people like how it works, then it will help them out and help them to establish credit. But I definitely would like to start my child off at a credit union.
So I have another question. And again, like I said, we kind of veered off the topic of budgeting and financing, but it's all blended together, right? So I have a question. So this is what happened. Like recently, me and my dad, we basically, we went to the bank. And initially what we did is I had told him to put me on his bank account as a beneficiary. As far as if anything should happen, I have access to, to his account per se. He's always tell me like, this is my number, my PIN number in case something happens, you can go in the bank. And, right. However, I was like, well, let me just tell him to put him on as a beneficiary. And then I realized after getting a little bit more information about even doing a beneficiary thing, I was like, well, maybe we should just do a joint banking account. It's just better that way, because if something should happen, whether for me or for him, it's just easier for you to, according to what I know, I don't know if I'm right or not, it's easier for you to access the money without going through like a whole probating and all this crap with like somebody trying to get the money. And I know you used to, it's been a while since you were in banking per se, but have you ever like, suggested that to people like, hey, maybe if you have a bank account, you maybe should put a beneficiary on it, or you should, get a joint bank account and then separate bank accounts or whatever.
I don't know. This is a good one. This is a tricky one, because if you get a joint bank account, you want to have definitely establish a trust with that person. I think for like parental purposes, it is best to have a joint account. If anything happens, then your child will be able to access those funds, because the banks are making it harder when that, God forbid, but working in the bank, I would see where someone passes and their family needs to access their bank account, but there's no one on the account. So it's like a whole headache, So to avoid that headache, putting someone down as a beneficiary or having a joint account can be very helpful. But just remember, when you have a joint account, it's truly a joint account. So you want to make sure you have that trust with someone. And this is kind of off the subject, but it's the same thing with, if you were to ever getting an auto loan for someone, putting your name on an auto loan or putting your name on a joint credit card, just understand that it's joint. Both parties are responsible. When the auto loan is late, then it affects both parties, So you want to be very careful when you are adding yourself or using your credit to help people to qualify for loans and credit cards, because once they don't make the payment, it impacts your credit. Also, once you're trying to qualify for a loan, like I said, your debt to income ratio is a factor. That auto loan is going to be included in your debt. Now, there are ways to get around it. If you can provide like 12 months of bank statements showing that the payment did not come out of your account but someone else's, but it's still a tricky thing. So just be careful who you add to your bank accounts. And just be careful when it comes to putting your name on loans and credit cards for people. We all know that person that had that disaster happen because they signed on someone's auto loan, you know?
Oh no, I know we have like 5 minutes left with you. So I have another question. If you guys have any questions before we get off here, please don't be scared to put in the comments. I appreciate David and James talking tonight as far as with Jamil as well. But when it comes to okay, so I've heard this before too, and this is just something that I've heard. And some people say that there's a window or a gap, like when you're paying your credit cards, that if you pay it within a certain time, it helps your credit score a little, helps to boost your credit score a little bit better or something. I don't know. They say like don't pay it at the time that they say, pay it like in a certain window bracket. I don't know. I'm like,
It's no, I've heard that as well. It's like pay it within your statement before your statement end date.
yeah.
Another thing you can do is ask your financial institution, when do you all report to the credit union? That can be helpful as well when it comes to establishing credit. Another thing that I highly suggest as well, like for loans, is paying twice per month, like because that helps to. So basically, you have interest which accumulates within a 30-day period. So once you pay it on the due date, so much of your payment is going to come out and be put towards the interest that is owed. But if you pay your loan twice per month, it like makes it basically helps to put more money towards the actual balance to bring the balance down. So little things like that are extremely helpful. It can be kind of tricky, but I would say if you are wanting to establish your credit, I would just ask the financial institution, when do you report to the credit bureau? And also, yes, I've heard the same thing as well, is paying your credit card before the actual statement date or the statement end date.
Yeah, I'm like, it's always interesting when you hear, it's a lot of different things that you learn as you keep kind of going down a rabbit hole of trying to understand finance, how credit works, how different things work. Because like you said, once you understand the game, you can play the game correctly. And I feel like you keep learning and you keep learning. And one last thing too, I know I said one last thing before, but nobody asked a question, so I'm gonna ask another question. So I remember we had I think it was Key had asked the question about it, but and she had gave me a tip that you gave her as far as like freezing your the credit card or something, where you can freeze it to be able to pay down another one or something if you're trying to pay stuff off. But if you freeze it, you can't use it, I think, in that time frame or something like that.
Let's see. So I said freeze your credit card.
So not freeze it, but I guess create like a, I don't know, like a certain, like an interest rate or something that you can with the credit card. I forget how she said it. It was something where you could pause the credit card or something but you can't pay it off. Like you can't use it again because while you're trying to pay it off.
Oh, okay. I think I know what you're talking about. So there are credit cards. A lot of credit card companies do offer like hardship plans. So you can contact your credit card. I definitely know Discover is one of them. Capital One is one as well. They have a hardship plan. But for this particular situation, yes, if you have a Discover credit card and you call them and say, hey, what kind of hardship plan do you have available? It is a way for you to pay that Discover card at a lower interest rate for a certain amount of time. Okay. So what happens is, yep, your interest rate is lower, which means your monthly payment is lower to help things to be more affordable. The only thing about it is if you do a hardship plan, then you can no longer swipe the card. They're going to put it like on a freeze so you can no longer use it. So I've done this hardship plan and it is somewhat helpful. You can definitely take advantage to, of a lower payment or, because the interest rate is lower, when you make your payment, more of it is actually paying your balance down. But my advice in general is just to pay it off, just to pay it off. But there are a lot of companies will not tell you that they offer hardship plans if you're not able to pay your credit card bill. So you may want to take advantage of a hardship plan instead of just not paying the card at all or being late on the payment.
Sorry, I'm like, I knew it was something like that. I said it wrong, so I apologize. But
No, you're fine. No, at first I didn't know. I was like, huh? But now I know exactly what you're, I know exactly what you're talking about. So, yep, if you're struggling with credit card debt, call that company and say, hey, what kind of hardship plan do you all have? And you will be surprised. They have things to help out.
Hey, Jaren, so we are at our time with Jamil. I don't want to keep her too long. So I'm going to, if you guys were not here earlier when she introduced herself, Jamil, this is her email address. So she works with Operation Hope. She's out of Georgia, though. So I think if they are in a different state, they would have to contact their local rep in that state, or could they kind of contact you to work with you?
Well, actually, the program is, we're all over the United States, and I can assist someone in different states as well. They will meet with me virtually. But the cool thing about it is there are representatives all over the US. And so if they want to speak to someone in their state or their city, absolutely they can. And if they choose to want to work with me, I can still work with you no matter what state you're in. We would just do virtual appointments.
Okay, so as you guys heard, you can still reach out to Jamil. David said, great guest tonight. Yeah, she is a wonderful guest.
Thank you. Thank you so much.
So you can reach out to Jamil. I'm going to also put her information in the comments below. So if you guys are watching this on the playback, you can, or the replay per se, you can reach out to her if you are looking to strategize with budgeting, financial, or any type of plan that you want to create that she can assist you with. Or, maybe she can direct you on the right path if you have other questions, that. But I want to thank Jamil again for joining us tonight. Hopefully we can have her back on again, and we can get more questions. I know we were supposed to kind of dive more into like the budgeting and financing thing, but this all kind of intertwines, and I feel like what, because how we were just having general conversation.
Like a conversation.
Yeah. So but all right. So
well, thank you for having me, Devon. I really appreciate you inviting me. This has been super fun. And yep, I would love to come back. So thank you so much again for this opportunity.
No problem. No problem. So we're going to say goodbye to our guests off the live. Well, I will see you guys next Sunday. And we hope to get Jamil back on here for another live.
All right. Sounds good. Have a good night.
You too.